Hello everyone, today I'm going to discuss the crash of 1929, and this starts out on October 28th of 1929, otherwise known as Black Monday, and on this day the Dow Jones Industrial Average dropped right around 13%. Then the following day, called Black Tuesday, Dow Jones dropped another 12%. So with these 2 days, the Dow dropped right around 25% in total, and this was what happened during the crash of 1929. And this also really started the Great Depression, which lasted from 1929 to 1939, so an entire decade, right up until World War II. And during this time, the Dow Jones bottomed out in 1932, where it dropped 90% below the peak before the crash. So the peak being in 1929, and only 3 years later, it dropped 90% in total. So almost to zero for the Dow Jones. Now, kind of getting into what caused the crash of 1929. So during the 1920s, also called the Roaring Twenties, there was a gigantic market bubble. There were relaxed credit terms. A lot of people were taking on debt to then put into the stock market. So leading up to 1929, there was a huge bubble, basically. And factories overproduced and sold their goods and services at a loss. So because of how much money was in the economy, was injected into the economy based on banks lending a lot of people money, factories were able to produce a lot more goods because people were buying these goods with this borrowed money. So when factories produced so much during this decade at a time when the economy was doing well with this fake money, eventually that all has to come to an end because the bubble must pop eventually. So that's exactly what happened in the late 20s, causing this crash. Factories overproduced. They had to start selling at a loss because the demand didn't keep up with how much of an increase in supply there was in the marketplace. So when consumers didn't buy as much as the factory producers needed them to, they had to start laying off individuals. So the unemployment rate went up, and then this caused a dip in the market. And when so many people were buying stocks on margin, so with borrowed money, when the market dips, they have to pay back that margin, and a lot of people couldn't do it because during the 20s, the stock market almost always went up. So finally, when it goes down and they have a bunch of borrowed money in the market, they can't make payments, and this further causes a decrease in the market. So companies had to lay off. There was huge unemployment rates, and this caused panic selling. So other institutions who were on margin and stuff had to also sell their stocks at a loss. So this basically just created a downward spiral in the total Dow Jones Industrial Average, and that's exactly what happened because of this crash. And then finally, how long did it take for the Dow Jones to recover after this crash? Over 2 decades. So the Dow Jones finally got back to where it was in 1929, the pre-crash price. It took until 1954 for it to do that. So decades of losses, basically, between in 1929, all through the 30s, all through World War II, and then finally in 1954 is when it surpassed the initial price, back at the end of the Roaring Twenties, basically. So yeah, obviously this is a crazy event that happened, one of the biggest crashes in the world, frankly, and it led to the worst time, basically, in American financial history, and tons of poverty during the Great Depression. So this is definitely an event that is good to know throughout history. Anyways, thank you for watching.